Hello traders, my name is Yaroslav Birchenko and today we're here to talk about why moving averages don't work. Let's start with a sad fact. No trading strategy is 100% guaranteed to give you success. So it's our job to find a trading strategy that works with an expectancy rate of at least 60%. And that means that 6 out of 10 trades should go in your favor. Now, if you find such a strategy, then good job. At the end of the month, you won't even need a money management strategy because you will be profitable. So, the idea is that no strategy works 100% of the time. Let's dive into an age-old strategy that is the moving averages golden cross. Now, you guys can see that the way that you put it on the graph is quite simple. We have two moving averages with a period of 60 and 4. Now, the moving average golden cross trading strategy is simply a cross of a smaller period moving average through the larger period moving average. And this is a tried and tested strategy that is even used in major investment banks in the United States and across the world. But a cross of the moving average will not always give you the right trading signal, right? So, what we will try to accomplish during this video is to show you how you can improve during the 40% times where you were supposed to lose. So, looking at a glance, how can you tell if this financial instrument will work in your trading strategy? Well, let's go ahead and choose an asset, probably the most popular asset in the world. We have the Euro USD. So this is a 5-minute graph. Let's go drop down to the 5-minute graph of the Euro USD, and we can see at a glance if I would like to trade this, financial instrument or not. So we're looking at the last 20 signals to see if they were quite reliable, if they were quality signals, and if later on this financial instrument will give me good signals that I can trade on. So how can you tell if we have a quality signal or not? Well, it's like I said, it's very simple. You want to check the history, look at the trading conditions, and see if we have good signals or not. And the trading conditions, or excuse me, the filter that you should be looking at during the platform is exactly through the moving averages. So the first moving average is 60, the second moving average is 4. You want to open a trade when they cross, all right? Now, the moving averages, they cross quite often, so not all trading signals should be taken, all right? The factors that need to be met in order for us to take the trade. Well, the first thing is there has to be a trend. There has to be a small trend that we're going up or we're going down. I can give you guys a few examples of awful trades where there are absolutely no events going on and it's probably a bad idea to trade. So having a look at this, when there's very low volatility, actually I may have a better example. Like right here, we are in a flat. The amount of trade signals that you get is quite often, quite a lot. But they're not as high quality. These are not trading signals that you want to take. So let me give you again some factors that you need to watch out for to increase your bottom line, to get rid of those poor trades that lose you money. Well, like I said, first one is that there has to be a trend. Second is add a few support and resistance levels to your graph. Back to our Euro USD trade, or the Euro USD currency pair. We want to be adding some levels of support and resistance. So the local one is right here. And then right here, this level that we just recently broke in the last 10 minutes. Then I would say we have another level right here, and then another level right here. So in all, these are the 2 levels above our asset and 2 levels below our asset that we have here. This is a good addition to any asset that you would be trading. Now, number 3, to get the best quality signal, first comes the breakout, then comes the signal that you should follow. Now, what I mean by that is, like I said here, first this candle breaks the 60-period moving average, and then we have the trade signal, the cross, give us the follow. This was a good quality signal that you should have taken. Here, first thing first, well, here they did it at the same time, but the breakout came first, and then we have a breakout of the moving average. Same thing over here. First, we break to the bottom level, then the moving average breaks. But even in this example here, the market could always throw you a curveball and knock you out if your stop loss is too close or your time period is too small. So let's have a look at our fourth criteria that needs to be met in order to take a really high quality signal, and that would be dojis, pin bars, flat, undecisive markets. They should be avoided. Let me give you guys some examples right now so you understand exactly what I'm talking about. So again, back to currencies. Let me see if we have any flat. So this is a perfect example, guys. Have a look at this. It's a flat, undecisive market. We have price opening up, opening up, down. Let me see if there's some more examples that I can give you guys. Like right here is a perfect example. See how the market is undecisive? It's relatively flat. So breakout to the top does not really give us much information. A breakout to the bottom also does not give us much information. And then we finally get some decisive wave-like market movements, and then we can use this strategy to trade. So let me show you guys some trading action in this video live. Let's drop down to the 1-minute graph and let's find a trading opportunity that perhaps we can have right now at the cross of two moving averages. All right, so here we have another example of the Australian dollar, Japanese yen. We have a cross of the moving average. First, we had the initial candle break the 60-period moving average. Then we had the moving average follow in a few trading signals after. Now, we came a little bit late to the party where we had a few minutes of correction time, but this next market move that went up higher, we had the opportunity to enter a fixed time trade to the top side, and so we're looking for the moving average cross to give us a profitable, really quick $1 1-minute scalp. So we can have a look here at our trade results. So far, we have had some profit. So in the next few seconds, we can see the outcome of the trade. Again, this is a high probability strategy that should give you a 60% win rate. And in those 40%, you can use some of the advice that I gave you during the video in order to maximize your results. So that's what I wanted to show you guys today. Now you know some very important information about moving averages and how to supplement your trading strategy with candlestick analysis. So we hope this video makes you some money trading, and if you guys haven't already, please leave the video a like button so that the video can, or that the strategy can make you some money, and make sure to subscribe so you can get some new information as it comes out from our development team. So leave this video a like so the strategy will make you some money in the future, and subscribe to know how we publish and when we publish new videos. See you guys next time.